The Mag 7 trade isn't even close to being dead yet. This one semiconductor stock is probably the one that's going to rally the most next. And we give you the one AI data center play that could 4 or 5x from here. All this and more in my conversation with Mike Lee of Mike Lee Strategy. Listen in. Welcome to The Big Skinny with Lou Basenese, where we cover everything in one headline that you should probably ignore because the consensus always gets it wrong, one chart that has the key data that you should pay attention to, and one investment insight that you should take so that you can increase your bottom line alongside ours. And today, I'm lucky to have a good friend, fellow Fox regular guest, Mike Lee of Mike Lee Strategy. Welcome, man.
Lou, how we doing, buddy?
Good, man. I'm not always moving as fast as you are. I've just learned before we start taping, not only are you a Brazilian Jiu-Jitsu king, you do high rocks and you do Spartan races. Anything else? You wrestle bears for fun?
No, if I don't have
ex-rugby player.
If I don't have something to train for, all I'm working on is how quickly I can eat a tub of Ben and Jerry's. So
I'm working for Chubby Hubby, man. Let's go for it.
Yeah, let's. There's got to be a goal, right?
All right. So the goal today is to just correct the misinformation out there, and headline that's out there talking about the Mag 7's dominance might be ending. What do you make of that? You think that's completely off base?
Oh, that's total and utter nonsense. These stocks are, first of all, you're not even close to a bubble. And when you look on a forward multiple basis, Netflix and Tesla are pretty expensive. But Apple's so when you eliminate those two, Apple's trading at about a 26 forward multiple.
Yep.
With the markets trading at 21, 22. That may be slightly rich, but then you move down, everything's trading almost in line with the S&P 500. And all these companies are the drivers of the earnings growth for the index. And so Tesla has historically always had an astronomical multiple. And right now with what's going on in robotics and the robotaxi, it's always traded on what's going to happen 2 or 3 years down the road, not what's going to happen.
And you believe Musk on this because you're a Tesla humanoid robotics
yeah,
fan, right? I mean, he came out on the last call this past week and said this is going to be the biggest product ever, not just for Tesla, but ever.
Yeah, it's look. So the Elon has this. He has this history of kind of over-promising and under-delivering in the near term, and in the long term, just blowing it away. A couple of years ago, the Tesla Model Y was the number one selling car in the world. Right, it's just astronomical that a car company that's only existed since for less than 20 years is the number one car selling in the world, given the entrenched bureaucracy and everything else that's out there. So he kind of underperforms these promises he makes in the short term, and in the long term, he blows away the wildest expectations. And he said from the beginning, and why I think he's going to win the robotics race is the product is not the product. The product is the assembly line. So he can build these things at scale, which in a way that no one else can. So they're going to dominate. And you start asking people okay, if you have if you pay to have your lawn mowed, or you have someone come and help clean your house, or this or that, how much are you paying? And could you afford a lease payment of $400 or $500 a month for someone that could work for you essentially 24/7? The answer is yes.
Yeah, absolutely. There's the 1X Neo, I think is going to be the robotic humanoid that's coming to market this year. And it's $500 a month or $20,000, one-time fee with a 3-year warranty. So, all right. So Tesla, super rich valuation on what's coming in the future, should grow into that. That's not a screaming buy at these levels necessarily. But what do you think? I mean, Mag 7 still driving earnings for the S&P 500 in a meaningful way. Which names are the most attractive to you?
So I've butted heads with this guy, but Michael Burry just bought some Microsoft, and I got to say he's absolutely right. You're not using Claude Code to replace Office.
Agreed.
You're not. I'm sorry.
Yeah.
You're going to use it to populate Word docs, PowerPoints, Excel. So that's an embedded. They've underfired a little bit on their Copilot execution, but that's a fixable, solvable problem in the medium term. And then Azure, their cloud business, the estimates are for 38% year-over-year growth. And every year,
and accelerating, right?
Every year the base gets bigger and the growth accelerates, which is mind-boggling. So I think when you look at Google, Amazon, Microsoft, and I said Google, right?
You did.
Yes.
We're going to say Alphabet.
So
I
yes.
get confused.
So four of the 5 remaining, not NVIDIA, what's happened with them is they have changed their business models to be heavy capital intensive. Right. And with the capital intensive, they're taking on a lot of debt. And they're not, historically, they've funded these capital expenditures with equity and cash. And like, if you're finance 101, it's much more effective if you're in wild growth stage, like all these companies are, even at the maturity of their businesses, to fund with debt. And so, it's compressed their multiples. If you look what's happened from October to now. So they're all reporting on Wednesday. It's going to be a spectacular beat. I think from all of them, we'll see how the market takes it. And Meta's the other one.
Yeah. I, on principle, do not go anywhere near Meta, even though it's undervalued. It's a great business. But I liken Microsoft. Microsoft for me right now is the most no-brainer buy of the Mag 7, just like Alphabet was last year about this time when everyone's like, they're going to get left behind with AI. Surprise, no, we're not. Just like Apple was a year ago, same thing, right? Like everyone's saying they're going to get left behind.
It's been 13 quarters where they've been saying AI is going to take out search.
Yeah.
And they've outperformed search every single quarter. So for Google. So Meta, 18% ad growth year over year. Again, very, very mature business. And they attribute 10 of that 18 to AI. So Meta to me is the first real use case of where you're seeing AI translate to net profits right away. And it's taking all this data, like my Facebook feed. I'm on Facebook now, unfortunately, more than I have been in like 15 years.
I would have never pegged you as a Facebook guy.
I like the upgrades are substantial and like I'm not, but it's like pulling up random sports stories from things only I would care about from 25 years ago or from the 90s or the 80s.
Like the Billy Ripken, remember that baseball card?
Yes.
Yeah, the baseball bat with said fuckface on the end and there was like 10 of them in circulation?
Exactly.
And that's what gets you clicking in the algorithm?
Yes.
I love it.
And so it's good. And now my phone's listening to me talking. My Facebook feed tonight is going to be sick.
All right. So you love Meta, Microsoft. We're in agreement there. Let's talk about the one chart that you bring up because I think this is super interesting. I don't think many people realize this because the name thrown around that's synonymous with AI and the AI trend is NVIDIA. But year to date, it's only up 15% versus the semiconductor sector up like 40+% after an 18-day run. So like, does that lagging continue or does NVIDIA close the gap eventually at 24, 25 times forward earnings?
The thing is NVIDIA, it's a widely owned stock. It's widely thought about, widely talked about. And so it just has these periods where it kind of does nothing and then explodes. Yeah. And so NVIDIA, if anything, should be trading at, in my opinion, should be trading at a premium to the market, not a discount. It is the cheapest Mag 7 stock, trading at about 15 times forward earnings. If you goose the estimates, which I think they'll beat every quarter as they have been. Yeah. And to be able to be doing like close to $500 billion in revenue and still growing at 40 or 50%, it's mind-boggling numbers that you can't comprehend. But you need to, you go back to Moore's Law, which is where you double CPU speed every 18 months. NVIDIA is doing a 10x in GPUs every year.
Yeah.
Right. And so
what about the narrative that the GPUs go obsolete in 2 to 3 years?
Yeah. Good luck.
I agree. I think it's bunk. It's a myth, but it
is nonsensical.
Right.
And so look, you have a logjam in all the levels of AI infrastructure. And so that's part of the reason why the semis have all rallied. Cause like I've been talking about this for a while. Anybody that's seen me at like one of the money shows, I've been hammering on AI infrastructure for well over a year. And it's because like, a token is 3/4 of a page of a large language model. Okay. And so the data that feeds the large language models is growing at an exponential rate.
Yep.
And the large language models are getting more complex, bigger, faster at an exponential rate. Okay. And then at the next hockey stick or exponential jump is the AI agents. Okay. These can't work without data centers, without GPUs. And the most complex agents, the most complex models are going to demand, like you're not going to be able to use a simplified chip from Broadcom or Marvell or one of these other ones. Like if you want to be doing the really complicated stuff, and then, the the Department of War is out there with the stealth $250 billion compute buy that people aren't talking about. And so half the data centers that have been announced aren't going to be built. right? Because of community pushback.
Yeah.
As if you could get enough energy.
Yeah.
Like, so this logjam is going to exist for a while, which is going to preserve pricing power.
Yep.
Right. And there's not enough NVIDIA GPUs when they come out to sell to the people that want them. So you have a supply demand balance. Like, this road is long.
No, I agree with you. Here's an interesting thread that I've been harping on now, because I think it's the catch-up trade in the semis, is the analog chip makers like the NXPIs and the STM or the OnSemis that make these analog chips that are used in industrials, in cars. They've been deprioritized for all the AI chips. So now you're giving what has become commodity chips, kind of middle layer stuff, pricing power. So I think NVIDIA is going to surge. But what do you make of, like, I mean, are you just all in on the entire chip sector, or do you think you got to be selective? Because if I look at the performance in this chart, right, chip sector, you pick whatever ETF you want to play it with, you know, Van Eck, you can play it with the iShares. They're the best performing ETFs over the last decade. Do you do better with NVIDIA moving forward, or do you do both? Like, hey, buy the ETF and then add some exposure to NVIDIA.
So NVIDIA is just an easy buy. Like, it's an unbelievable cash flow generator. They're not taking on debt like a lot of these other AI plays.
Yeah.
And like, you know, they're going to more than double from here. And it's safe. So if you don't want to gamble with it, and then as you go down from there, the next chip maker I would buy is Broadcom, which earlier this year I highlighted for our stock picking contest.
Yeah.
That stock's up $100 since our stock picking contest.
Yeah.
You're welcome.
You know what? I love AVGO. Like, it's an old AVGO that's now Broadcom, still got the ticker symbol.
Okay.
It's great pick by you.
Then
you also called Oracle too, I think, right?
Yeah.
Doing well too.
Yeah. And then, but in the chip space, then you have AMD and then you have Marvell. And so whenever you hear Microsoft, Google, Amazon, or Anthropic coming up with their own chip, it's generally either AMD, Broadcom, or Marvell designing it for them. Right. And so that kind of goes under the radar, but as it gets announced, so Marvell is a stock that I've owned, I've been talking about. And like, when, you know, it's at $50 right after the tariffs, and like Stuart Varney goes, where do you think the stock will go? Do you think the stock will go higher from here? I'm like, at least a double.
Right.
And I was
that
like,
gets Stuart
I was
excited
like,
all the time.
I actually said, oh, and Stuart just looked at me and goes, oh. But
he likes when you say his stocks are going to go up, especially his Microsoft.
Yes.
And Blackstone.
Oh yeah, so
he
like off topic, but like Blackstone, Apollo, Blue Owl, okay, they don't own any of this debt. They simply manage funds that own the debt. And yes, this may hurt their fundraising capabilities and some of the marks in their private equity, but there's only so many games in town. These are small parts of their overall businesses, right? And funding AI data centers is an unbelievable business. So you talk about you buy an apartment building for $10 million, it's $1 million rent roll, that's your 10% cap rate.
Yep.
Okay, you build a data center for AI use for $1 billion. Okay, you may get $300 million to $600 million a year in rent. So between a 30 and 60% cap rate.
That's insane. I've not thought about it that way, but I should. Like,
granted, at the end of 5 years, when like, so CoreWeave gets 5-year contracts from Microsoft and all these other guys, at the end of 5 years, you know, you don't know what that rent renewal is going to be. So you don't get that premium, but like, it's probably still going to be a 20 to 25% cap rate if we're being conservative.
So even with the write downs, losses, whatever it ends up being on that side of the private credit, it doesn't destroy their businesses. They're rocking and rolling because of data center stuff.
No, it's not like the banks in 2008 where they held the junk on their books.
Yeah.
Okay. It's the clients that own the stuff.
Well, it wasn't even just the banks holding on their books. It was like quadruple levered and like resold and repackaged and levered again. And like, you know, one individual loan was probably securitizing like 10 different products.
Yeah, Blackstone, it's not Blackstone's money that owns the debt, it's your money.
That's right. Key distinction. That's right.
So like, you know, these companies are trading at historically low multiples, and like, you know, if rates, like, so Kevin Warsh is going to get confirmed now. And, you know, I harp on this. EJ Antoni, if you follow him, harps on this. Truflation is tracking inflation. We're looking at 1.8% year over year CPI today.
Yeah.
Warsh said it in his Senate committee hearing. You know, he looks to alternative measures of inflation. Like, rates are going down. He's getting confirmed. We could be 150 basis points lower on the front end.
150 basis points, you think? Do you think we go that much lower?
Well, if inflation is tracking at 1.5%, so if oil reverses trend by the end of the summer,
which I think happens.
Okay. And inflation starts tracking at 1.5% in the truflation or kind of real inflation.
Yeah.
Okay. Why are we going to be 300 basis points restrictive at that point.
But ever since the Fed came up with the target, what, like 18 years ago, 12, like we've never hit the 2% target. So you think we're going to finally get below 2% in a meaningful, sustainable way?
Yeah, look, I think they can stay restrictive, but they don't need to be, I think we're 175 basis points restrictive now.
Yeah.
So maybe that goes to 125, or I'm sorry, it goes, we cut 6, that's 5 or 6 cuts and you're still restrictive.
Interesting. That is not a very consensus thought, but I like it because you're right. The trueflation numbers are much lower. I mean, guys like EJ, Anthony Pompliano, yourself have really been leaning in on that and saying like, hey, this is real data. There's all signal here, not noise, like the traditional CPI measurements.
So if you think about what that does to the marks in the private equity books, because everything is levered at least 50%, everything is SOFR based. Right. So you're now getting extra multiple turns with every single one of their investments because debt will be substantially cheaper for all those investments.
Yeah.
So more than enough to offset end of the world private credit times. Right.
So I usually ask guests, do you think private credit's contained or contagious? You are definitely in the contained camp.
We don't know. I know the people that manage that debt are about as smart credit people as have ever existed. And look, there's always bad loans. And I think the search for yield where, circa 2021, beginning of 2022.
Yep.
Okay. They stretch companies these are all private companies. Some of them may fail. The guys at Blackstone and Blue Owl and Apollo, they are not like people that you meet at church, right? They're gonna charge as much.
It's not saying they're bad people. They're just
they're gonna charge.
They believe in usury.
Yeah, well, yes, they're gonna charge as much as they possibly can, and sometimes that's to the detriment of the business, and if a business materially deteriorates. So there are bad loans out there, right? But not enough.
Not enough to All right, so weird segue to your one high conviction stock pick. Is this debt idea, CoreWeave. Traditionally, data center, hyperscaler, enabling the hyperscalers, their knock against them is they had a crap ton of debt. How do they work through that? You think this is a stock that could easily double from here?
I think it's more of like a 4 or 5x from here. And so you got to understand their debt with that example that I was telling you about. So they sign a 5-year contract with Microsoft, okay? And they'll finance and it's a little bit opaque as to how much of the data center they're paying for out of pocket, like your equivalent of a down payment.
Yep.
But I do know that 2.5 years into the 5-year lease, all the debt and interest is paid. So when the rent payments go into a black box, the debt, and their drawdown loans. So if they're taking on $1 billion worth of debt, they it's not all at once. So you're not paying interest all at once. It's as you're building them. Same way you get a construction loan.
Yeah.
On your house. Okay, they get this whole thing fired up. They have a 5-year lease, single tenant. Get Microsoft better credit than the United States government. Okay.
Which isn't saying much sometimes.
So the rent payment comes into this black box. It services the debt, the interest, the CapEx, the OpEx. Okay. And then 2.5 years in, there's no debt and interest left.
Yep. It just drops to the bottom line.
So it becomes insanely profitable. And so let's just say in that $1 billion example, they were getting $300 billion a year in rental income from Microsoft. Maybe in year 6 to year 10, that's 200 or 150, but it doesn't
matter at that point. It's just all.
Thank you.
Yeah.
Thank you.
No,
and so
it's fair.
They, versus any of the other neo cloud spaces, they own exponentially more NVIDIA GPUs. They're a much, much bigger business.
More than like a Nebius or an IREN? Because IREN is
multiples, many multiples of them. And so their speciality is taking the latest NVIDIA GPUs and firing a bunch of them at a time, or as they refer to as clusters. And they have all sorts of services and software that go along with it. So if you're firing 50 GPUs and 5 of them are failing, what can they do to make sure you stay online? What other services do they have? And so with that, they get these contracts and they're having the best. And like Anthropic just signed a massive deal with them. Meta had a $14 billion contract with them, just upped it to $21 billion.
Yeah.
Right. And so again, this is a capacity constrained world. Right. And
so
at some point it won't be. Right. And that when it is, then you're just effectively buying a REIT with depreciating rents.
Well, they're all going to transition into a REIT model. I talked to the CEO at TeraWulf, right? And they're building out scale. And he's just like, look, we're going to do this and add 250 megawatts every year of power in boxes until we can't do it anymore, until there's no more of it. And then you're just going to convert this into a REIT. And it's going to be like the Equinix that just just cash flow generating, spins off, pays dividends.
Yeah. So while they're in this kind of like hyper growth phase, what kind of multiple do you put to that, and how do you back out earnings? And I think that's where the confusion comes in. But like they're going to 5x revenue before the Anthropic deal, before the Meta deal. They got it to a 5x of revenue in 2 years, from the fourth quarter of 25 to the fourth quarter of 27. Like it's
big growth.
It's all like it's happening. It's a volatile stock, but like I don't like it. I love it.
If you haven't noticed, we're all about all filling, zero fluff, and so is our email newsletter where we deliver insights, one headline that you should probably ignore, one chart you should absolutely pay attention to, and one investment idea that you should follow to increase your bottom line right alongside ours. So if you're not signed up yet, go to thebigskinny.com, sign up for our newsletter. If you can't be bothered to give up your email address, that's okay. Give us a follow on Twitter or on YouTube so you never miss another episode. All right, before you run, you said it right here. You love that stock. So I like to play a game, F, marry, kill. Because we're married guys, it's fun to trade. Marry a stock and then kill one. So I'll give you 3 names. You got to decide. I had some other guys that try and skirt out of it, right? So let's go with some of the ones you love. CRWV, Palantir, and NVDA.
So this is actually kind of easy.
No way.
Because I'm already married to Palantir.
Okay.
So Palantir keeps announcing government deals day after day after day. And what they've done with their Maven op, they're now like the system of record for the Department of War.
Yep.
They will be the operating system for all of the federal government. For those that are unfamiliar with what they do and how they operate, they take large. So first, think of your iPhone. You're on the iOS, or if you have an Android phone, your Android is your operating system. Palantir is the operating system for the Department of War. Okay, and they have all sorts of other doohickeys and gadgets that they sell on top of that fill in these little pieces, and they have all sorts of other little software projects. But just for right now, understand that they are the operating system, and
it's a good way. I love that way to think about that, because most people go, "What does Palantir do?" And they don't know.
So, and then at their core, they're a data organization company, so structured and unstructured data.
Yep.
So think of like finding Nancy Guthrie's mom's or the video on the Ring camera that was in the middle of nowhere in some cloud. I don't know that they use Palantir, but that's the type of thing Palantir would do. Yeah. So Palantir doesn't collect your data. The government collects your data. Palantir just helps them make sense of it.
Yeah. No, that makes sense. I like the operating system for the Department of War much better. I use the analogy that there's structured data that's like the nerd accountant that organizes it, and there's unstructured data, which is like the genius like Robin Williams, who probably has a messy everything, but he knows where things are. Palantir lets you know where everything is.
But it's important to understand that not only are they the operating system, they have all sorts of other doohickeys and gadgets, but like what feeds AI? It's data.
Yeah.
So Anthropic is not a threat to them. Like they're the gas for Anthropic's fire.
All right. So you're married to Palantir.
Okay.
Till death do you part.
We're going to fund CRWV.
Okay.
And then
you're going to kill NVIDIA?
Yeah, look, you gotta make a decision.
We just said it's the cheapest stock out there, and it's gonna.
It is. I think NVIDIA's probably got 2x upside. I think CRWV's probably got 5x, and I think Palantir somewhere in the middle. With that, and it's just their best days are in front of them, and that's the government, not the private sector, which
just adds a whole other multiple. Yeah. All right. So that was a fun one. I appreciate your candor there. Let's go another one. Broadcom, Apple, and Alphabet. All these A ticker symbols.
So you fund Broadcom, you marry Google or Alphabet, and then you throw Apple to the wolves.
Dude.
So
all right. I got to hear this because I'm a forever Apple fanboy. I would marry Apple because I'm already married to it. I would I'd kill Alphabet because I've done really well on that one already, and I would fund Broadcom. But my point on how could you kill Apple is 2.5 billion devices. This becomes edge AI. Edge computing gets done here, and you get privacy because it's going to be done on your iPhone. Apple's going to develop a custom chip. Keith Fitzgerald and I were talking about it. How do you kill it? Why are you killing it? You're killing my child.
Yeah, well, look, you got to make a decision.
I respect that.
So it's just like, I could be wrong, and it's tough between Google and Apple. But Google has like everyone's search data to feed Gemini. Okay, like if quantum ever becomes a thing, Google's probably going to win. They have the biggest quantum.
No, it's a fair point. And they don't have the take like Apple about keeping everyone's privacy private. No. And then so Apple, like, these are all good stops. And then Broadcom, like the win is at your sales. So for those that don't follow, like Broadcom is the one making the custom chips for all these different people. And like you can't, like, I don't know, maybe they get 10 or $20 billion a year in revenue just from Google alone. Like it's unbelievable making TPUs. A TPU is a tensor processing unit, which is a simplified version of a GPU graphics processing unit specifically for large language models. It's cheaper and uses less energy just because it's got a specified function. It's very task specific. All right. 2 more to go because I think these are interesting and I'm curious on your takes on this. What do you think happens first? The Polymarket Kalshis of the world get extremely regulated to prevent insider trading, or politicians get banned from trading stocks?
Oh, that's an easy one. That's an easy one. Like the lawmakers aren't going to kill their golden goose.
But they should.
And I gotta say,
it's so obvious.
And like while we're here,
like the best performing hedge fund can't outperform freaking Nancy Pelosi. Like that's not right. There's something wrong in the world.
But you gotta say, in regards to the Delta Force guy that bet on Polymarket that they were going to take from
Maduro.
Yeah, look, there was
13 bets.
There was a huge unknown whether or not they would do that. That's just having confidence in yourself.
Yes. Right. As you have your hand on the trigger and you're part of the planning. Like I don't buy that one.
I like.
There's too narrow of a line between
there was no rule against that to start.
Agreed. Right. No, he didn't violate any technical rules, but I think it's exposing the weakness in it. I think the prediction markets are being touted as the biggest thing that they're going to end up collapsing.
So look, the prediction markets exist because and like are so vital because polling in our country is not an honest profession. It's designed to push opinion, not measure it. And so like without people betting with their money, you have no idea what they're saying. And so
the money actually reveals what they like. It's like consumer sentiment versus personal consumption trends, right? Sentiment's record low, but everyone's spending like drunken sailors. Yeah,
but like the sentiment's record low because of like that University of Michigan is broken. If you look at the Democrats versus Republicans and how wrong the Democrats have been about inflation expectations and everything for like the last decade, and it leans left. Like they need to find people, like they need to change their sample or their data collection method. Yeah.
Which brings me to my last question, because this is probably something most people don't appreciate about you, but I do, is your uncanny understanding and history and context of politics and just local elections, national elections. And then what do you think is going to happen in midterms? And what do you think, does that matter to the stock market?
So I think the Senate, Polymarket's got it, like the Republicans a little bit under, but the Republicans have such a massive structural advantage in the Senate. I think they could hold the Senate. Okay, they're going to get crushed in the House. Like think about 1994 in reverse, right? Or 2010 in reverse, and it's because the coalition that elected Donald Trump is like the bar scene from Star Wars. It's so random. Like you have your traditional.
We're gonna find that B-roll for this episode, man.
Well, it's you have your traditional boomer cons that like are watching us on Fox Business and Fox News constantly, and then you had Muslims in Michigan, you had African American men, you had Hispanics, you had lots of women who weren't engaged because of the Maha movement, and so like. It's really hard to keep that coalition together. And for a lot of different reasons, a lot of these low propensity Trump voters, which didn't vote in any midterm since he was elected president, like he kept expanding kind of he kept expanding the size of the bar in Star Wars, right? And so like
I'm stealing all these analogies,
but it's difficult to hold that hodgepodge together without treading very carefully and prioritizing certain things first. And so like, I don't want to get into any specifics of it, but like this Jeffrey Epstein stuff to a lot of these marginal voters was their key issue because it signals government accountability. And that if there's a different rule for the elite than there is for me, then why am I going to engage in the process? So that's what the Republicans are going to come home with and deal with, as well as not passing the SAVE Act and like a lot of other things that they promised to do. And like all you really get, same thing as the first two years of Trump term, is like you get a tax cut, which good, but it's not enough to get the conservative person who's not attached to politics out of their seat and vote.
Yeah, no, that's fair. I appreciate the analysis. So now for people that don't always keep their portfolio in order, where do people find you? Because you obviously, you share your insights, but you're actually managing wealth for people in an effective way. You got people into Palantir, probably the earliest that I've heard of anyone, maybe outside Keith Fitzgerald. I think the two of you were, your idea in Palantir was almost simultaneously.
So michaelleestrategy.com, you can Google me, Michael Lee Strategy. And so, we manage assets for people with portfolios of 5 million and up. Track record is like
really good.
Well, look, we are in a bull market, and the client's portfolios reflect that.
Yeah, that's fair. Well said. Very humble, but at the same time, you have a hand in that as well. So listen, man, always appreciate your insights. Thanks for joining us again.
Awesome, Lou.